Yes, we can see your picture. Hey guys, this is Insurance and Finance live from the headquarters of Digital Scouting in Hamburg, Germany, and from the beautiful city of Miami, Florida. Today we have a very special guest. We have Alex Horvitz here, renowned investor from the insurance and insurtech space. Alex, thank you very much for being here.
No, thank you very much for the invitation. Wish I was with you over there in Hamburg. Love the city, love Germany. So happy to be in the show with you.
I actually plan to come to Florida this year to the ITA conference, an insurance conference run by Jim. And then this pandemic came and ruined my trip to Florida. And really funnily, it was really funny because they asked me, do you want to be a speaker on the conference? We are located in Florida. And I was like, how can I now negotiate? Because in my mind it was already bought. I'm there, I'm coming. How long can I stay? Don't tell them though. All right, but let's start with a serious question. We have seen like 2020 is already a hell of a year in a lot of aspects, pandemic, economic crisis, political crisis around the world. Will we see any substantial investments into the insurtech space, or is the party over?
Well, I think it's a very interesting question you ask, and ourselves as HCS Capital, we are investors specialized in risk in insurtech and cybertech. It's a question we ask ourselves every day, and I think there is a before and after. I think this pandemic and many other events that I can also comment are changing the mindset of the investors, typically the non-specialized investors. Yeah. Because you see many companies in the insurtech space that have very strong business models, but you also see many renowned names. When you look at the economics, the unit economics, the potential of EBITDA, their ability to subscribe risk is very, very poor. Yeah. And people get tired of losing money, especially when it's a long period. So I do think there is going to be a downturn. Nevertheless, I'm very positive about good business models that have two capabilities, that are resilient, that have more than one revenue model, and especially that they are able to make money.
It's interesting that the investor wants to see the company making money, because I think that's like I think it reflects the different phases of insurtech investment we have seen over the last, let's say, 5 years. And you're saying, okay, at the beginning we had a little bit of hype and it was enough to do certain things, and now people expect the return on invest. What do you think is going to be like the development this year, next year, in that space?
Well, I think there's going to be positive and negative development. The negative developments would be that I believe that this year there will be a couple of names in the insurtech space that will go out of business. Maybe they do it elegantly. They get acquired by the people that put the money, or less elegantly. But that would happen because when you have companies that already start to have some size, 30, 50, $100 million or euros of premium, and they are subscribing at close to 100% loss ratio, meaning that they are pricing below the cost of risk, that is not sustainable, and that starts to be a lot of money to be lost, right? So I think we're going to see some of those events. But also we're going to see very positive events, whether it's in the specialty business, pet insurance and so on, whether it's in known lines like life products sold digitally that have very nice margins, very high level of satisfaction of clients. So you're probably going to see that the water will go down, and then you will see who has swimming trunks and who doesn't. That's what's probably going to happen this year. Because of everything that we are seeing in the market.
I'm reminded a little bit by the quote of Warren Buffett that said, when the tide goes out, you have to see who has been skinny dipping. And what I really like about the idea is you have so many companies led modestly or substantially, or looking for revenue streams and doing uncool things, or maybe doing several things, and that they now get rewarded for this actually. We have already two greetings to you. I think we can greet him back. You just Bertin, also from Chile. Thank you very much for being here. And also we have here Jeffrey Lee. Thank you very much for being here. Everybody out there watching right now, I mean, we have dozens only on LinkedIn already. Please like, share, comment, ask a question to Alex. Everything you ever wanted to hear from an investor, or like, share anyway, because it helps us to spread the message on Facebook, on LinkedIn, on Twitter, on Periscope. So don't forget to hit the like button and write a nice comment. That would be really appreciative. My question is, we also have a lot of not only insurance veterans, insurance decision makers here in our audience, and subject matter experts, but also people working in insurance and insurtech startups. Sometimes I hear behind the scenes, especially in Europe, oh, it's so super hard to get funding, even before the number of disasters that struck us this year. What would you recommend somebody that's looking for funding right now?
Look, I think, yes, it's difficult to get funding many times, and it should be difficult to make sure that people tell you the truth about what they think about the business model. But when I see the opportunities out there, seeing more from the insurance side, I see tremendous opportunities. Let me give you a couple of examples. Pet insurance. Pet insurance specialty lines been around, but it has very low penetration in some parts of Europe and certainly in the US. In the UK, they have a penetration of more than 20% of the product. In the US, we are at about 2%. Also in Germany, in France, and so on, the penetration is very low. Why do I take that example? Not that I'm recommending that you go into pet insurance. As a matter of fact, we have an investment in pet insurance in Figo in the US, and I can tell you also about that. But there are special lines. There are many lines where you have a very high potential for growth. You have a very high potential on the margins. Some of these companies are making 30, 40% EBITDA margins, which is very healthy. So when you present your model, your business, your startup to the investors, there are two things that we really, really are very strict about it. One is how robust is your business model in terms of revenue streams. Yeah. If one line goes down, are you dead, or you have other ways? I tell you a little bit about one of our investments. Joycar is a telematics car insurance business. They have a personal lines that is selling super well today. Why? Because they package that as a insurance by kilometer, pay as you drive. Yeah, it's doing super well. I think that that's not enough. So when we invested, we wanted to see commercial lines also. Now they have commercial lines in Mexico and commercial lines starting in the US. I want to see an ecosystem, meaning if you buy the insurance product, you get benefits, you get discounts on maintenance, you get fuel advice on how to lower your fuel consumption. So I want to see a model that is broad. Yeah. I want to see priorities, but I want to see a model that is robust from the revenue. And then I also want to see, I'm an old-fashioned guy maybe, but I want to see unit economics. I want to see margin. This story on, you keep on throwing money and I'm going to grow like crazy is great, but I need to see when the money is going to come back. Many times I ask, so round B or C, so how are you going to make money? And the answer is our last valuation, 2 valuations ago, we were at 5 million. Last valuation was at 10 million. I already doubled the money. And I say that works when it goes up, and it goes really fast when it goes down. Because there is no round, there is no money, the game is over. So my advice, you'll be concentrate on showing how robust your business model is and show how you are able to produce positive unit economics, therefore margin.
I think that's super interesting that you underline that you actually need to do like not only do the shiny thing, but the hardworking on business model, multiple income streams. I mean, it sounds a little bit like a no-brainer, but if you are so under pressure in the setting up of the business, fighting on so many fronts, I think it's good to have a partner that says that. So one sentence that came into my mind when you were describing that was, so Alex, you're not only investing money, but you're actually also helping them with this outside feedback.
Yeah, I think an investor should do that. Yeah, the story of only financial investment, I send you a check and we meet 3 or 4 times a year in a board meeting. frankly, it's a little bit, it's not, I wouldn't say useless, but it's not very valuable. When we come in, we have a bunch of ex-McKinsey, ex-consultant guys, ex-insurance people like Hugues Bertrand and others. We really help strategy in the strategy space. We run these investments as if they were a consulting project in the first part of trying to stretch the mind of the company. We also help them opening doors and so on. So and I'm not selling myself, even though I'm trying, but I'm more trying to tell you what you should be looking for. You should be looking for somebody that really understands the sector. When we are investing, as I mentioned before, in cyber risk. We open an office in Tel Aviv. Asher Geffen is running that office, a very well-connected guy. We go very deep in cyber risk because in order for us to invest and to help the companies where we invest, you really, really need to know the nitty-gritty of the business. Either you know it because you come from there, or you bring people into your team that are experts in the area.
Yeah, and what we do sometimes do behind the scenes, we don't talk so much about it, but since we're only us and a few hundred people, is sometimes we do like a little bit like Tinder of insurance, where people say I need some capital, and we know some investors, and then we bring it together. And in a lot of cases, it makes total sense from personal, but sometimes it's just that they say, I just once said, I don't know that country. I cannot help the startup. I don't have so many connections there. So I would love to invest, but it makes no sense because I cannot do what I would love to do. So I think that's really, really interesting what you say. It's really, really, really putting a lot of intellectual energy into that. And maybe also for people looking for money, look for that too. And maybe you have a little bit better, maybe you have a little bit worse term somewhere, but if the person can open doors, helps you a lot, has a whole team of ninjas behind him that can do a lot for you. I think that should be in the decision. You are also well connected in the whole investor sphere in the US, also in South America, and now also in Israel. My question to you is, what is a little bit the atmosphere in the scene? How are they thinking currently?
Look, I think that there are, of course, different type of investors. There is a corporate investors, the people that created corporate VC units. They are the multifamily offices, and they are the institutional investors. And they all have a very different behavior, I would say. When I look at the investment, let's take Latin America. Latin America last year deployed about $4.6 billion in capital, which is a substantial amount. What is also very interesting, that there were over 100 rounds of $50 million or more. And that is why I use that example, of course, because we have an office in Santiago and I know the market very well, but more importantly, because that's not a geography where you say VC is booming. If you go to Israel, last year, there were almost $7 billion invested. And when I look at my colleagues in the venture capital world in Israel or in the US, especially in Israel, there is no shortage of funding. People are more and more strict about what they look at, but these funds have cash. They need to deploy it. But of course, they need to deploy it in a very smart way. So again, I think we have a market where the VC world, it gets more and more technical, professional. Many firms like Sequoia and big names have been very technical and professional for many years. But we're also in a market where you have very low interest rates, probably zero or negative soon. And you have a stock market that has very high levels of volatility and so on. So I think VC money is available. There is a lot of capital. This is whatever construction we are in front of. This is not a financial construction. Money is out there. It's a construction that's going to hit very different business model, airlines and so on in a bad way probably. But it is going to be a very nice period for VC and private equity firms, because there are a lot of assets and startups there that have very good ideas, and I'm frankly excited.
I think I really love what you said. Like the last word was really, really cool. I mean, everything before too, but that was really interesting. Why? Because especially in old Europe, we're always looking at what's negative, at the risk, and not so much at the reward. And I think also these times, as bad as they are, are also a huge opportunity for everybody, for incumbents, for startups, for investors, for ecosystem partners. Jeffrey asked a great question about cyber. We will go there in a minute, but you mentioned South America, your presence there, and also super interesting ecosystem, even though we learned from Huge Bertin, who was also guest at our show, of course, about the diversity of this super large continent. Even though you might not, and the question is a little bit too broad, but for all the people that are not so deeply involved in the space, in the region, what do we know? What do we need to know about the insurtech space in South America?
Look, I think it's a really exciting place. When we created our first fund back in 2016, we were not inclined to invest in South America. We were focusing mainly the US, and that's when we invested in FIGO, in pet insurance, and we were looking for other assets. Because of personal connections and so on, we got to know one first company. We got to know Joycar. And what we liked about Joycar is that they started their life in Chile, which is a very competitive insurance market, even more competitive than many parts of Europe. And they made a little bit of a name there, starting to work with Sura and other large groups. And when we got in there, we said, you know what, this is a model that we can export anywhere in the world. I spent 20 years in Europe, in Munich, and in many parts of Europe. So I saw that model. I said, if I had that model tomorrow in Germany or France, I could start running business immediately. So the good thing is that it was exportable, and we exported. Now they're working in Chile, Peru, they're working in Mexico, and now in the US. And they are looking for partners to expand into Europe and Asia. Fully exportable model. Where is another advantage? Is that the cost they have, the cost structure in technology and so on, is very low. Now they're entering the US market in the fleet management space. Their cost to enter and the end price in fleet management is half than the market price, and they are making a very nice margin on it. So
I think that sounds sometimes a little bit. I think a lot of competitors will not like that message. But to be quite honest, I mean, this is the beauty of the globalized world. I know globalization is now a little bit under pressure, but to be quite honest, we at Digital Scouting are also a remote company with people in, I think, 13 different countries all around the world. And we also have super great experts, awesome designers, video teams, organizers, whatever, in different countries, which gives us the opportunity to not only deliver awesome services, but also at a price that our competition hates us for. But okay, that's okay. Let's go.
The end client benefits from that price. That's the name of the game.
Yeah, totally. So, and here, let's go to Jeffrey's question about the cyber question. He asks you, can you share a little bit more the opportunities in cyber risk insurance? And Jeffrey, thank you very much for asking that question.
Look, I think the cyber opportunity from the insurance, from the risk point of view, is tremendous. It's humongous, right? It's probably going to be the largest single insurance line over time. So that sounds great. So let's go for it. The problem is that the technology, the know-how you need to underwrite, and not only underwrite, to monitor risk, is fairly sophisticated. Yeah. Should you start subscribing risk tomorrow? I would say no, because this is very complex risk, and it's not theoretically complex. There was a study done by Oxford and other practitioners and universities where a combined hit cyber attack on different industries would be over $100 million loss. Yeah, and that's not only theoretical. When you look at the losses of Mondelez, over 140 million. And Maersk, 300 million. So the losses are very substantial. That means that if you want to underwrite there, of course, a specialty line, you need partnerships. You need people with the ability not only to model that risk, to monitor that risk on a permanent basis. Monitoring, for instance, to look at your sites, to do some simulated attacks, see where the gaps are, the security gaps, report it to the client, report to the insurance company to make sure that those gaps are continuously being closed. Another thing that I come from insurance, in insurance, we always said we need a lot of data. Certainly you need a lot of data. The problem with cyber insurance, or the cyber risk, is that the previous data is not so good to predict the future. Why? Because the cyber criminals keep on inventing new ways to attack you, right? So somehow the old data, yes, is useful to start underwriting, but you need continuous new data on what is happening, intelligence on what is happening, in order for your clients to be safer and for you to have a risk that is acceptable. But bottom line, I think it's a tremendous opportunity. That's why we created the office in Israel, to be in the first line. It's one of the countries with the highest level of innovation in cyber protection for obvious reasons. And we like that technology, but we like it from the cyber risk. Very few people are active today. I'm telling you all this, even though we spent about a year and a half investing on it, because I think more and more startups and more people should get into this field. The opportunity, again, is very exciting.
I think you touched a super important point there, because just before this show, we had our German elephant round with like C-suits and decision makers from the German insurance industry in German. And what their big, like large brokers said, like with substantial amounts of business, they said they think everybody will go out of cyber because it appears to be a pandemic risk. But what you say is, if you know what you're doing, not.
Well, I think if you don't have an ability to measure risk, to monitor risk, you better get out of it really fast, because the hits could be very, very substantial, right? Now, if you build up the abilities to underwrite, I think it's a superb opportunity. It's a very technical risk. In the old days, I remember when I was in industrial insurance, you would never subscribe a risk unless you would go with your technical people, look at the wiring, the electrical wiring, the fire systems and so on, the fire alarm systems and so on. Well, this is the same thing. The only difference is that looking at the wiring is a little bit more complex, because everything is abstract, everything is technology on the cloud or what have you. But if you have that technology, start building your skills, because this is a tremendous opportunity for the insurance sector.
I think that's a great term to underline the opportunity, I think what's also interesting is it's a possibility to grow, and what it also shows, what you described, is the whole trend of just providing risk coverage to risk management to actually really consulting, value-adding service, because it's a super value-adding service if you don't get attacked, or even if you, maybe even new things come out of that. So I think that's super important, this mindset of, okay, I have a policy that, has historical data in it, and it recovers some risk, or you have a living business unit that does these things. Maybe that's a different philosophy actually behind it.
Yes, I fully agree with your point there. And I think that same point applies to different sectors. Let me give you an example of Joycar, one of our companies, but many other companies are doing something similar. Commercial lines. We all know in insurance that commercial lines insurance is a bad business. Risks are very high, very difficult to predict, and so on. High frequency and high severity. So not a place where you want to be. Now, what are these guys, what have they invented? They took the platform from the B2C, the personal lines, they developed it into the commercial lines. What is the value that a client gets? A client gets a platform, a system where they can manage their fleet. They know where the trucks are. They know if they're consuming more fuel than they should. They know if a guy is sitting in the truck having lunch with the air conditioning and the engine running. And of course, they say, look, this is not good. They know how the driver is driving. They have a behavioral part that tells the driver, look, your scoring driver is not good. You have to do these 3 things to improve. The client gets that day one. On top of that, we say, if you want, we can sell an insurance policy to cover you. But we, of course, are going to offer that to the people that drive properly and that run their business, their fleet management is done properly. Now you are getting there into an ecosystem. Now we are getting into, we can lower your maintenance, because we know when the battery is going to go off. We tell you 3-4 days in advance, such that the battery doesn't go off while you are using the truck, right? We tell you when is the optimal time to change your tires. We know how much you are driving, and we have analytics to tell you. Imagine an insurance client that gets all those benefits, and on top of that gets a very good protection in insurance policy protection. Why would you go somewhere else? In insurance, in my older days when I was in Munich, we always thought, we do insurance, this is a very good product, that's what we do, we don't do anything else. And for us, improving the service, it was to have a very good call center for people to call in. The world now has changed substantially. You need an ecosystem. You need a wide value proposition.
And why? Because otherwise you get pushed away from the client and other companies sucking in your profitability, and you're reduced to a risk carrier that makes a margin of almost close to nothing, and you have all the work and not anything of the fun. I think it's not only like a nice thing have, it's a strategic decision. The world is changing. Do you want to change with it and participate and have opportunities, not only defend but have opportunities, or not? And who wins the client? That's the big thing here, I think. And after you're listening to you, I am not surprised that you invested in pet insurance and in Figo. Because when I met Rusty for the first time and saw a presentation years ago, I even can't remember when, 17, 18, I don't know actually. I was really surprised by the app they did with this value-adding service. It was not about the insurance for a pet, but it was actually about the pet, the life, meeting others, where can I go and have a walk and things like that. I'm not sure if they even had like who's also single pet owner. I don't know, but I have something ringing like that. It's all in that. And let's talk a little bit about pet insurance, because I know there are several large projects around the world from carriers and insurtechs looking at that.
Yeah, sure. No, happy to tell you. Look, as I said, pet insurance is an under-penetrated market worldwide, except for very few exceptions like the UK and the Nordics. I think when we saw Figo and the value proposition, we were convinced immediately for a very simple reason. They said, look, this is our user experience. This is the platform. 1 out of the 12 things we offer is around insurance. The 11 others are around lifestyle. They even study things like what is the color that people would like when they get the little folder with information about the policy. You know, when you go to the vet and you have a claim, you take a picture. That picture gets uploaded. Fine, anybody can do that. But look at the detail. The machine would read the thing, would scan it, and would know that the vet already said that in 6 months you have to give this shot to your pet and do this and that. Yeah. All that information is kept, and the machine would send you a reminder 2 or 3 weeks before. Remember, your dog needs this vaccination in 2 weeks and so on. They would also do things like, you know, there is